So they downgraded their growth forecast, Sayuri, but also upgrading inflation for this year. Their forecast now at 2.3%. I have to wonder, is this any sort of precursor for tightening, or how should we be interpreting these forecasts now?
Yes, so this inflation upward adjustment was no surprise, and this is just a temporarily. And the inflation next year, we expect to see some decline toward 1% from April. So it's just a temporarily, and then it's not going to impact BOJ's monetary policy status.
We did, though, hear them mention the yen, no surprise with it at this 24-year low, very much saying that we are seeing moves in FX and they're going to continue to pay attention to that. Your view, I guess, here and on how as well effective a yen intervention could be from the BOJ at this point?
Mm-hmm. So it's true that the yen's depreciation is increasingly impacting on Japan's inflation. And then in the past, 2018 and 2021 last years, BOJ expanded this 10-year yield target around 0% towards 0.25%. So technically, BOJ is able to expand this 10-year yield target range. But Mr. Kuroda denied this expansion of target range last monetary policy meeting, after Q&A sessions. So I assume that he is going to maintain this policy. But if situation arose, for example, reduced uncertainty, toward the end of this year, he may, it's still possible for the BOJ to show some flexibility by expanding this target range around 0% towards, say, 0.3%, 0.35%.
Number one, inflation is rising. Sayuri, do you agree with Governor Kuroda's assessment that inflation is rising, but for the wrong reasons, right? It's energy prices, commodity prices, and he needs to see wages rise to think this is a sustainable inflation increase. And number two, that, you still need the stimulus right now because small businesses need it, and because the ability to finance the large government deficit is also very important here, and that's why you need to keep these bond yields and even short-term rates under control.
Yeah, so as you said, BOJ is looking at the demand-driven inflation, and that's nothing happening right now. But, as I said, BOJ in the past introduced flexibility by expanding the 10-year target range, so they can still do it. But I think at this moment, for example, last month, there was a lot of speculation happen, driven by foreign hedge funds. So, when the market is so uncertain right now, probably BOJ want to maintain status quo and reduce any uncertainty related to BOJ's next move. So, as you said, BOJ want to see inflation demand driven. And then if you look at inflation excluding fresh food and energies, the Japan's inflation is still just at 0.8%. So, it's very different from U.S. situations.
And yet the markets and traders continue to try to put a time frame on when the BOJ is going to have to shift policy. You mentioned about how there could be some tweak on the yield curve control. What do you look for in terms of how to gauge the timing of this shift? Do you think it's pushing forward now, that sort of forecast, or should we actually be pushing back that forecast for any change of policy given the recession risks out there?
So, at this moment, I really do not see, any strong reason for BOJ to expand the yield target range at this moment, because this means raising interest rate. When the global interest rate on the rising trend, increase in Japan's, interest rate may have an adverse impact on the Japan's, debtors, and because a lot of Japanese mortgage floating rate based, so it's not very good for Japanese economy. So maintaining status quo is the best strategy at this moment. But at the same time, BOJ introduced flexibility over time. So if there is a less uncertainty about Fed policy and a global condition related to Ukraine crisis, it's still possible that BOJ may introduce some additional flexibility. So I think we still have to wait toward the end of this year.
Certainly flexibility when they're saying here that they're still looking at potentially adding stimulus, as you say, which is different to what we're seeing from other central banks. But they are saying the impact of COVID softening on the overall economy. Just tell us how you are seeing the economy hold up, how the consumer is holding up.
So right now, Japanese services sector is on a recovery process. In January, March, we had a lot of mobility restriction related to COVID, and those restrictions are gone now. So we started to see a pickup in the services industry, and foreign visitors are able to visit Japan now. So, services sectors are doing okay. As we saw the Tankan survey, there was an increase in the sentiment among the services industry, while manufacturing sector are not doing well because of global uncertainty, shortage in the semiconductor chips, in materials and energy high cost. So service sectors are doing well. So overall, I think there is a positive economic growth for April, June, and shifting from negative growth in the first quarter to positive growth around 3%. So it's not extremely bad.
Sayuri, do you agree with this view that, as Governor Kuroda gets ready to finish his second 5-year term in April, just months from now, that this is when the BOJ, supported by the Prime Minister and his team, will open the door to finally moving away for an extraordinary stimulus, finally saying we don't need our key rate at negative and we don't need to have yield curve control? Is that when you see it happening? Do you think that'll be part of the changeover of the heads of the Bank of Japan?
To be honest, I don't think there will be any big changes, and even after Mr. Kuroda leaves in April, because when we see the Japanese economy, it's not really strong. Potential economic growth is just 0.5%. The aggregate demand, consumption is not very strong. We don't really see a strong pickup in inflation, in wages, because our productivity growth is very sluggish. So, in this situation, low interest rate makes sense in Japan. So probably BOJ may increase the more flexibility. It's possible, there might be some changes on this target range and also negative interest rate. But I don't think there will be any big changes, considering Japan's situation.